Ever gaze up at the night sky and dream of blasting off into the cosmos? Maybe you've even considered investing in the final frontier. But before you put your life savings into that sleek, chrome spaceship you saw online, there's a crucial question to answer. Is a spaceship a managed investment? It's a question that might sound like science fiction, but with the rise of private space companies and the increasing commercialization of space travel, it's becoming more relevant than ever. So, buckle up, space cadets, because today we're unraveling the legalese and investment jargon to see if spaceships belong in your managed portfolio. Let's break it down. Managed investments come in many forms, from mutual funds and ETFs to hedge funds and private equity. The key characteristic is that you, the investor, entrust your money to a professional manager who makes investment decisions on your behalf. These managers aim to generate returns based on your risk tolerance and investment goals. Now, spaceships are undeniably complex machines. Owning one wouldn't be like buying a car, it's more akin to owning a small, very expensive business. There's maintenance, insurance, potential for upgrades, and of course, the not-so-insignificant cost of fuel, or whatever powers your particular spaceship. So, can you hand over the keys, or, launch codes, to a manager and expect them to turn your spaceship into a profit machine? The answer, well, it's not a simple yes or no. Here's why. Currently, the space tourism industry is still in its infancy. While companies like Virgin Galactic and Blue Origin are making headlines with their suborbital flights, these are more akin to expensive joyrides than true investments. There's no guarantee you'd see any return on your spaceship, let alone a profit. However, the future of space travel holds promise. Companies are eyeing resource extraction on asteroids, point-to-point travel on Earth, and even permanent settlements on the Moon. If these ventures become commercially viable, then spaceships could become valuable assets. But here's the catch. Investing in spaceships through a traditional managed investment fund is highly unlikely. These funds typically focus on established markets with readily available assets. A spaceship, on the other hand, is a highly specialized, custom-built piece of technology. It wouldn't fit neatly into a diversified portfolio. So, what are your options if you're space travel obsessed and have a healthy bank account? Direct ownership, this is the high-risk, high-reward option. You buy a spaceship outright, taking on all the responsibility and potential profits. Think of it as owning your own private airline, but way cooler and way more expensive. Fractional ownership, this is where multiple investors pool their money to buy and operate a spaceship. It spreads the cost and risk, but also the potential returns. Space-focused startups, investing in companies developing space technologies, could be a way to get in on the ground floor of the space economy. This carries the inherent risk of any startup venture, but the potential rewards could be astronomical, pun intended. Remember, space travel is still a developing field. There are significant regulatory hurdles, technological challenges, and the unknown unknowns of operating in the final frontier. With that said, thanks for watching, and until next time.